In this video, we're going to walk through how to do your crypto taxes if you're a UK resident. We'll discuss exactly how Her Majesty's Revenue and Customs, or HMRC, approaches cryptocurrency taxation and share practical steps for staying compliant. Stay tuned, you're watching CoinLedger. All right, we're going to outline a 4-step process for getting your crypto taxes done in the UK. Step 1, understand the tax implications of cryptocurrency in the UK. Step 2, aggregate your historical crypto transactions. Step 3, calculate your gains, losses, and income. And lastly, step 4, report income on your self-assessment tax return. Okay, step 1. Understand the tax implications of cryptocurrency in the UK. So you don't need to become an expert, but you should have a basic understanding of how HMRC taxes crypto-related income. Generally speaking, there are 2 buckets that cryptocurrency income falls into within the UK. 1, capital gains income, and 2, ordinary income. Investing activity like buying, selling, and trading falls into the capital gains income bucket. For example, if you buy Bitcoin for £40,000 and then trade it for Ethereum when it's worth £42,000, you incur a £2,000 capital gain. And this is income from your investing activity and thus treated as capital gains income on your tax return. On the other hand, if you earn cryptocurrency, whether that's from a job, mining, staking, or earning interest rewards, that earned income falls into the ordinary income bucket. For example, if I earned 2 Ether over the course of a year in interest income, let's say from lending out my ETH on Compound, I would recognize ordinary income for the associated value of 2 Ether. You'll need to calculate your capital gains and ordinary income in pounds sterling and report that amount on your taxes. Step 2. Now that we have a basic understanding of cryptocurrency tax treatment and how it's handled, let's move on to step 2, aggregating together all of your crypto transactions. Whether you've been buying, selling, or trading on multiple exchanges or earning staking rewards to a particular wallet address, the next step for getting your crypto taxes done is pulling together all of your historical transactions across all of the platforms you've used into a single unit of record. Once all of your transactions are in one place, you'll easily be able to calculate your gains, losses, and income from those transactions in pound sterling terms. But if your records are scattered all over the place, it's going to be extremely difficult, if not impossible, to do this. You can pull together all of your historical transaction data by hand, or you can use crypto tax software like CoinLedger to automatically connect your cryptocurrency accounts and import all of your transactions. In this example, I'm importing my buys, sells, trades, and staking rewards from my exchanges like Coinbase and Binance, as well as my MetaMask wallet. With just a few clicks, I can import all of my transaction history from these platforms directly into my CoinLedger account. Now I have all of my historical transactions gathered into one unit of record. Step 3, calculate your gains, losses, and income. So once you have all of your historical transactions in one spot, it's time to calculate your gains, losses, and income from each of your taxable events. A taxable event is simply a scenario where you are realizing income and thus triggering a tax reporting requirement. We've already outlined some of these in our earlier examples. For instance, you incur a taxable event when you sell crypto for fiat currency like pounds, when you trade one cryptocurrency for another, when you use crypto to buy goods or services, or lastly, when you earn crypto. Thanks to our second step, where we gathered all of our data, we have all of our historical buys, sales, trades, and income events across all of the crypto platforms we've used in one spot. Now, if you're doing this part by hand, you can manually calculate your gains and losses from each trade by looking up the pound sterling value of your cryptocurrencies at the time of each trade. If you want to avoid this manual step, you can simply run your data through the CoinLedger engine, which will do all the historical price lookups and number crunching for you. Whichever route you take, you need to calculate your gains, losses, and income in pound terms across all of your transactions. Remember, the UK has some specific rules on how to calculate capital gains, including the shared pool accounting method and the bed and breakfast rule. You can learn more about the specifics of these rules in the article linked in the video description. So once you've finished your capital gains and income calculations, you're ready to move on to the final step, report on your self-assessment tax return. To report your capital gains and losses, you need to complete SA 100 and capital gains summary SA 108. To report your ordinary crypto income, complete box 17 of your self-assessment tax return, SA 100. You can do all of this online through the Government Gateway Service. We've included the link in the video description. Or you can file your self-assessment tax return with paper forms by post. Within CoinLedger, you'll get a complete breakdown of your crypto capital gains income as well as your ordinary income in pound terms that you can include with your self-assessment tax return. So to sum things up, follow these 4 steps when you're sitting down to do your crypto taxes this year. Our 4 steps are: 1, understand the high-level tax implications of cryptocurrencies. 2, aggregate all of your crypto transaction history into one unit of record. 3, calculate your gains, losses, and income in pound sterling terms. And 4, report your income on your self-assessment tax return. If you want help automating this entire process, you can sign up for a CoinLedger account completely for free with no credit card required. As of recording this video, we've helped over 500,000 crypto investors of all different backgrounds get squared away with their tax reporting, and we're extremely confident that we can help you too. So that's all for now. Happy tax season to everyone, and I'll see you soon.